Right. At first, today we will discuss matters given in the textbook. Last time we discussed up to bank overdraft. Then today we will discuss bank reconciliation statement on some matters given in the textbook. Okay, already we have discussed how to do a bank reconciliation question. Okay, we discussed already. And after discussing those questions, I think last year we started to discuss matters given in the textbook. Okay, therefore today we will discuss bank reconciliation statement available in the theories available in the textbook, and we need to highlight some of the points. We need to highlight some of the points available in the textbook. I think we'll be able to complete our textbook today. We'll try to complete. Okay, matters. Okay, then we can complete chapter 9. Okay, after completing chapter 9, we will move into chapter 10. Chapter 10 within 1 day or within 1 day or within 2 days, we can complete chapter 2. And then chapter 11, preparation of trial balance, already we have discussed. Therefore, no need to discuss chapter 11 again, but we will do few questions related to chapter 11. And then we can move into last session. But anyway, February onwards, I'm going to start grade level lessons. Therefore, and then while we're discussing grade level lessons, we will discuss chapter 12. It means last session in grade 10. The last session in grade 10. Okay, right. While discussing grade level, we'll discuss time to time. We will discuss questions relating to chapter 12 in grade 10. Okay, fine. Therefore, please, if you don't have a grade 11 textbook, please find out a grade 11 textbook. And then, I can send you the soft copy. If you have soft copy, then you can get the printout. Okay, right. Anyway, we will start grade 11 in February. Right now, I go to page 122 textbook. We will discuss matters available in the textbook. Please go to textbook at first. New students, you can get the recordings. Okay, you can get the recordings of bare reconciliation. If you want bare reconciliation, it means recordings are related to chapter 9. Please send me a message, then I will send you the recording. Okay, if you watch the recording, definitely you can get the real idea of bare reconciliation. Okay, and existing students in the group also can watch the previous recording. Okay, please, if you don't have, if you have some doubt regarding bare reconciliation, please watch recordings again. Okay, then you can realize everything. It means from question number 1 to, at least you need to watch question number 1 to question number 4 videos. Okay, question number 1 to question number 4 videos. It means video 1, 2, 3, and 4. Okay, fine. Please go to page 122. Please go to 122. Please go to 122. Quickly, we will discuss matters available in this textbook. Right. Right. Now, quickly, we will read the note. Give you some idea. Right. Tanya, can you read the sorry? Tanya is not available. Right. Tisasa, can you read the first para?
Okay, sir. You have already studied how the transactions are recorded in the bank account, which are carried out through the current account of a business. The favorable balance of the bank account of a business is an asset to the business. Should be recorded in the bank account according to the double entry principle for assets. The transactions which increase the balance in the bank account are debited, and the transactions which decrease the bank balance should be credited to the bank account.
Right. Now, already we have discussed bank account, how to prepare the bank account. Bank account belongs to an asset account. Okay, bank account of a business, one of the asset account, one of the asset account of the business, and then uh, cash inflows to the bank account debit. Okay, cash outflows from the bank account credit. Cash inflows debit to the bank account, cash outflows credit to the bank account. Okay, now we have discussed everything. Okay, everything we have discussed in detail. Therefore, quickly we will read the matters available in the textbook. Okay, and we will highlight required points. Huh? Right, and then here, this is the format of bank statement. Huh? This is the format of bank statement prepared by the commercial bank. This is the bank statement prepared by the commercial bank. Already we have discussed. Okay, format of bank statement. Okay, this is the format. Okay, in chapter with question number 3 and 4, we have discussed bank statement. Bank statement prepared by the commercial bank. Okay, right. And then we read the second para. Setum. Read the second para, Setum.
Now let us study how transactions are recorded in the book of a commercial bank, which maintains a current account on behalf of a business. The bank also records in its own books the transactions of the business operated through the current accounts by a business. The account that is maintained by the bank of a business it is treated as a liability account of the bank. Therefore, the bank records the transactions of the business according to the double entry principle for liabilities. Accordingly, the transactions that increase the bank balance should be credited, and the transactions that decrease the bank balance should be debited.
All right. Now, already we have discussed with question number 3 and 4. Here, our business. Okay, if you deposited cash, in our bank account, how to pass our identified business organization? Business organization cash book credit. Let's say 5,000 cash book credit, 5,000 bank, and then bank account debit 5,000. Bank account debit 5,000. Okay, cash book credit, bank account debit, and then after depositing this 5,000 in bank by the business organization, how they pass double entry? It means commercial bank. Commercial bank pass double entry like this. Commercial bank, one of the business in Sri Lanka. Commercial bank is one of the business. Therefore, they debit that 5,000 to their cash book. Commercial bank, let's say Sampath Bank. Okay, Sampath Bank. Sampath Bank, one of the company in Sri Lanka, one of the business. Okay, they apply double entry principle. Then, according to double entry principle, Sampath Bank cash book debit 5,000. Once you deposited cash into your current account, Sampath Bank cash book debit. Already we discussed, Sampath Bank cash book debit, and then current account credit. Our current account credit. Let's say this business belongs to Hirodya. Let's say this business belongs to Hirodya. Then Hirodya's current account credit. Debit, credit, and balance. Then Sampath Bank cash book debit. Hirodya's current account credit, cash deposit 5,000. Then balance available is 5,000. Am I? These points we have discussed in detail. Okay, then? Therefore, please watch previous videos. Okay, then? Video 1, 2, 3, 4. Then definitely you can get a real idea. Okay, if you don't have a real idea regarding the bank reconciliation, please watch those videos again. In those videos, we discuss everything in detail. Then, okay, here, so Hirodya, this bank account, one of the asset account. One of the asset account. Therefore, Hirodya apply principle of asset. It means asset increase debit, asset increase credit. Okay, this bank account, an asset account to Hirodya. Therefore, bank asset, if bank asset increases, increasing bank account debit, if bank asset decreases, bank account debit. But this 5,000 is a liability to Sampath Bank. This 5,000 liability for the Sampath Bank. Therefore, they apply liability principle. It means if liability increase in credit, if liability decrease in debit. Here, liability increase by 5,000. Liability increase by 5,000. Then to the Sampath Bank, Hirodya's current account is a liability account. Liability account. But to Hirodya business, this bank account, an asset account, an asset account, an asset account. Okay, right. Right. Please highlight these points. Please highlight these points. Please highlight these points. Now, please highlight this sentence. Please highlight this one. The account that is maintained by the bank of the business is treated as a liability account of the bank. Liability account of the bank. Please highlight this point. Please highlight. Right. Okay, and then students, this is a format of bank statement, right? Okay, the opening balance and then cash deposit, check payment, direct deposit, bank charges. Okay, right? Bank statement format, right? And then, right. Right. I think no need to discuss this point, right? We will move into page number 123. Now I go to page number 123, bank statement. Bank statement. Bank statement, right? Students, in each month, this current account maintained by the Sampath Bank. Okay, this current account maintained by the Sampath Bank. Okay, actually, a statement of this current account sent to the business organization in each month by Sampath Bank. Okay, it means transactions conducted with the Sampath Bank. Transactions conducted with the Sampath Bank. Okay, recorded in this current account, and this is called bank statement. This is called bank statement, and then this bank statement, a printed copy of this bank statement sent by the Sampath Bank to the current account holder in each month. In each month, Hirodya can get a statement from the Sampath Bank which include transactions conducted with the Sampath Bank. Okay, then that is called bank statement. The bank statement, transactions conducted with Sampath banks are included. Okay, right. Now I quickly look at the page number 123. Look at the page number 123. Right. First para. First para. Paspara Devmi. Devmi. Pritish Paspara Devmi.
Usually, banks send a statement called a bank statement to their current account holders once a month. The bank statement shows the opening balance, items which are debited and credited by the bank during the month, and the closing balance.
Right. Usually, banks send a statement called a bank statement to the current account holder once a month. Okay. The bank statement shows the opening balance, items which are debited and items which are credited by the bank during the month of the month and closing balances. It means transactions conducted with the bank included in this bank statement. Right. And then here at present, bank send a computer printout to the business that hold a current account. Business that holds a current account. The statement that is sent by the bank is known as the bank statement or statement of account. Lamai, please highlight this sentence. Statement that is sent by the bank is known as the bank statement or the statement of account. Please highlight this. Okay, right. And then Lamai, should answer. Right. This is a format of bank statement. This is a format of bank statement here. Right, particulars, the particular mean description, and then payment. Payments mean debit side. Receipts, credit side. Payments mean debit side. This is credit side, and then balance, and then balance. So as a source document to adjust the bank account, what do we use? Bank statement. Maybe bank statement, huh?
Okay, so thank you.
Right, right. Done, right. And then right. Quickly, we will move into page number 124. Go to page number 124. Go to page number 124. 124. Right, now here you can see reasons for the differences between bank account balance and bank statement. Now here you can see reasons for the differences between bank account balance and bank statement. Okay, reasons for the differences. Right, now reasons for the differences between bank account balance and bank statement balance. Reasons for the difference. Already in detail we discussed. Quickly we will look at the theoretical matters available in textbook. Right. What are the reasons? Look at the textbook. Look at the textbook. Here, the reasons for the difference between the final balance of the bank account and final balance of the bank statement. These are the reasons. What are the reasons? First one, the check issued but not presented to the bank for the payment. Issued check but not presented. Issued check but not presented. First point. Issued check by the business. Issued check by the business, but still unpresented to the bank. In our bank reconciliation statement, unpresented check we need to add back. Unpresented check we need to add back. Okay. Already we have discussed. Unpresented check we need to add back. Unpresented checks are not issues of the business. Business issues. Those are not errors done by the business. Those are not errors. Some of the time delays. Therefore, no need to adjust unpresented checks into our bank account. Okay, no need to adjust into our bank account. Then, unpresented check we include in the bank reconciliation statement. For what? The reason is to provide to provide reasons for the difference. Okay, now to provide reasons to the top management of the business. To provide reasons to the top management of the business. We prepare bank reconciliation. Okay, if bank account balance is not equal to bank statement balance, if there is a difference between two bank account and bank statement, to provide reasons to the top management, we prepare bank reconciliation statement. We prepare bank reconciliation statement. Otherwise, okay, those are not errors by the business. We have properly recorded. But supplier has not presented the check to the bank and he has not taken cash. Okay, unpresented check. Unpresented check we record in bank reconciliation statement. Those are not pure errors, right? Then here, who is B336? What a rename karana? B336. Right. Then here, the check issued but not presented to the bank for the payment, right? And then over here, right, next one, the checks deposited but not realized. Deposited check but not realized. We have deposited check. We have properly debited checks. We have properly debited, but still the bank has not collected cash for that check. Deposited check but not realized. Then that unrealized check is not an error of our business. It's not an error of our business. Okay, some of the time delay we have properly recorded and deposited, but still the commercial bank has not collected cash for that check. The commercial bank has not collected cash. The commercial bank has not collected cash for that check. Therefore, to provide reasons to the management of the business regarding the difference between bank account and bank statement, we need to enter unrealized check into our bank reconciliation statement. Okay, right, right. And then now I no need to discuss each point in detail, right? No need to read these things. Already we have discussed. Right, and then direct remittance. Direct remittance means what? Right, direct remittances. Direct remittance means some of the parties directly deposited cash into our bank. For example, you deposit cash into my account as class fees. But sometimes some of the students do not send me the slip, and then I don't know the students who deposited the cash into my account. The same thing happened in the business organization. Some of the customers directly deposit cash into our bank account, but still the business is not aware. Until receiving the bank statement, the business is not aware about the cash deposit by the customer. That is called direct deposits. Okay. Okay, one party directly deposited cash into our bank account. Our bank account. Direct remittances, direct deposits. Okay, right. Now, we will read that. Himaya. Read this para Himaya.
There are occasions when some customers deposit their dues directly to the current account at the bank. Similarly, receivables such as rent, interest and dividends, etc., are sometimes directly remitted to the current account. These are known as direct remittance. A business realizes such direct remittance after the receipt of the bank statement. Although such direct deposits have been recorded as receipts in the bank statement, they have not been recorded in the bank account of the business.
They get recorded, directly received cash to the bank, but still we haven't recorded those cash in our bank. Therefore, we need to adjust. Okay, therefore, we need to record that direct remittance in our bank. That is our fault. That is our fault. Okay, right. And then payment on standing order. Now, what do you mean by payment on standing order? We have ordered. Here, Kiribathgoda current account holder. Kiribathgoda has ordered to the Sampath Bank to pay some amount to some party on a specific date. On a specific date. On a specific date. Let's say Kiribathgoda has informed to Sampath Bank, please pay 50,000 in each month from my account to Selinco Insurance Company. Standing order given by Kiribathgoda to Sampath Bank. Then, based on that standing order, Sampath Bank pay, let's say 25th of each month, Sampath Bank pay 50,000 to Selinco Insurance Company. Selinco Insurance Company. Okay. Standing order given by the current account holder to the Sampath Bank. Then now here we assume based on the standing order, bank paid cash to Selinco Insurance. But we have forgotten that standing order. We were unable to record that standing order payment in our records. Then after receiving bank statement, the business is aware about the standing order payment. අපිට ස්ටේට්මන්ට් එක ආව පස්සේ තමයි අපි දැනගන්නේ ස්ටෑන්ඩින් ඕඩර් එකක් බේස් කරලා බැංක් එක කැෂ් පේ කරලා කියලා. Okay නේ? Right. ළමයි standing order payment. Standing order payment. Another point. Okay, right. Hirodya. Hirodya, read this paragraph, Hirodya. Hasid, read this paragraph, Hasid.
Standing orders refers to an order made to the bank in writing by the business to pay certain regular amounts, such as repayment of installments of bank loans, leasing installment, insurance premiums, and other similar payments from the cash in the current account. The business gets to know of these payments after receiving the bank statement. The bank deducts the value from the current account after payment of such standing orders. Although the payments on standing orders have been deducted in the bank statement, these have not been added in the bank account yet.
Right. The line here you need to highlight standing orders refers to an order made to the bank in writing by the business to pay certain regular amount. Please highlight this point. Sometimes examiner may ask you to write down the meaning of standing orders. Please highlight. Standing order means an order made to the bank in writing by the business to pay certain regular amount to some party. Okay. Regular amount, and then you need to highlight from the cash of the current account. From the cash of the current account. From the cash of the current account. Then based on standing order, Sampath Bank debit that amount into your current account. Sampath Bank debit that amount into your current account. Okay, ne? Right, ne? Right. And then bank charges. In a commercial bank, in grade level we will discuss. In a commercial bank, we can open 3 types of accounts. In a commercial bank, we can open 3 types of accounts. One is savings account. Savings account. Okay, savings account. You can save money. You can deposit at any time, and you can withdraw cash at any time if you have a savings account. Okay, most of the people having a savings account. Then, if you have a savings account, commercial bank pay you an interest. If you have a savings account, based on the available balance in the savings account, you can get interest income. You can get an interest income. And another account is fixed deposit. If you deposited fixed amount for a specific period, okay, for a specific period, that is called fixed deposit. Fixed amount for a specific period at a certain interest rate. You deposit a specific amount. Let's say 5 million. Okay, for 2 years. Commercial bank agreed to pay 10% interest. Certain amount, specific years, specific interest rate. You can deposit some amount in a commercial bank as a fixed deposit. Then, if you have a fixed deposit account, Sampath Bank pay you interest. Sampath Bank will pay you an interest. It means if you have a fixed deposit account, you can earn an interest income. You can earn an interest income. But if you have a current account, now my current account is now we are discussing current accounts. If you have a current account, okay, here now you can deposit cash and you can deposit checks at any time into your current account. And if you want to arrange some payment by issuing a check, you can arrange that payment. Okay? තමයි වල current account එකක් තියෙනවා නම් ඔයාලට current account එකේ cash deposit කරන්නත් පුළුවන්, check deposit කරන්නත් පුළුවන්. අර payment එකක් ඔයාලට check එකක් issue කරලා payment එක කරන්න පුළුවන්. Okay නේ? You can pay through a check. Here current account means maintaining current account means here a commercial bank provide a service to you. They manage your cash. Commercial bank manage your cash. You deposit cash and checks and you pay by issuing checks. Here the purpose of current account is not to save money. Here purpose is to manage cash. Then here Sampath Bank provide a service to you. Service to your business organization. Therefore, because of managing your cash, Sampath Bank charge a payment from you. Sampath Bank charge. Okay, yeah? Sampath Bank deduct some amount from you as bank charges, as service cost. That is called bank charges. If you have a savings account or fixed deposit account, you can earn an income. But if you have a current account, you need to pay bank charges to commercial bank. Okay, you need to pay bank charges to commercial bank. We'll discuss savings account, fixed deposit, and current account in grade level. Okay, in grade level. In detail, we'll discuss. Right. No, why commerce is a practical subject. Practical subjects. Actually, here there's no any theory. All are practical. Accounts, BS, everything practical. I can give you a practical example. Now also we are discussing practical things. Practical things. Okay, one day you can experience these practical things. One day you can experience, right? Tell me here. We discussed direct remittances, payment on standing orders, and then bank charges and the charges on checkbooks. Am I? Charges, right? The sum of the okay, a service cost. Actually, service cost charged by the commercial bank. Right. Quickly, we will read this para. Irishma, read this paragraph. This one is right. Isra, read this para, Isra.
Bank charges and the charges on checkbook. The charges that a bank deducts from the current account for the services rendered by the bank to the current account holder is known as bank charges. The amount
please highlight this sentence. Please highlight this one. Sometimes examiner may ask you to write down what do you mean by a bank charge? The charges that a bank deduct from the current account for the service rendered by the bank to the current account holder is known as bank charges. Right, then Isra, read the note, Isra.
The amount charged for the checkbooks issued by a bank to the business is called charges for checkbooks. The business realizes how these charges after the receipt of the bank statement. These changes have been debited in the bank statement as payments. They have not been recorded at the end of the time period.
Right, Lamai. Here, deducted bank charges. Okay, here, debited bank charges by the bank. Debited bank charges by the bank to our bank statement. To our bank statement, realized by the bank. Okay, identified by the bank after receiving bank statement. And then after receiving bank statement, we need to credit bank charges into our bank account. Okay, then this bank charges deducted by the bank is an income for the commercial bank, income for the Sampath bank. And then bank charges recorded in the credit side of our bank account is an expense to our business. For the commercial bank, this debited amount bank charges, this debited bank charges income. But for our business organization, but for our business, this deducted bank charge is an expense. Expense, right? Right. In a way, right. Then here we discuss issued but unpresented check, deposited but unrealized check, direct remittances, payment on standing orders, bank charges, and checkbook charges. Okay, right. Am I? Right. Right. Those are the reasons for the difference between bank account and bank statement. And then here you can see in your textbook, here you can see one of the example. One of the example. Okay, bank account, bank statement. And then we discuss these things. All right. Then here, bank account, you need to cross check debit side of the bank account with the credit side of the bank statement, and then you need to cross check credit side of the bank account with the debit side of the bank statement. Okay, and after that you can prepare adjusted bank account and bank reconciliation statement. Right. In page number 128, you can see some of the things regarding adjusted bank account. Adjusted bank account. Okay. Adjusted bank account prepared by you. You are the accountant of the business. if you are the accountant of the business organization, you need to adjust your bank balance. Okay, errors done by you, some of the mistakes done by you need to be adjusted in your adjusted bank account. Here, what are the transactions we adjust in our adjusted bank account? Direct remittances, standing order, and bank charges. Samai, please highlight these 3 points. Please highlight. Please highlight these 3 points. Right. And then in page number 129, you can see some of the things regarding bank reconciliation. I no need to read these things. Okay. Right. And then right. Right. And then here you can see one of the right now example for the bank reconciliation. Adjusted bank balance 21,000. Check not presented to the bank 16,000, and then 37,000 total amount. And then here unrealized check minus, then you can calculate balance as per bank statement. Right, balance as per bank statement. Right, Lamai. That is the end of theoretical matters available in the textbook. Right, Lamai, shall you do this question, activity 3 in your textbook? Shall you do this activity 3 in your textbook? Right, students, I will give you 10 minutes. I will give you 10 minutes. Try to do this activity 3. Activity 3 of your textbook. Here you need to prepare adjusted bank account and bank reconciliation statement. Adjusted bank account and bank reconciliation statement. Right? Everything we have discussed, huh? Okay, in this tube, we have discussed. Question number 1, question number 2, question number 3, question number 4, question number 5, 6, 7, 8, 9, 10, 11. In detail, we have discussed. Therefore, I think now you can manage any kind of bank reconciliation question. I gave you the idea regarding reconciliation from A to Z. Everything we discussed. Therefore, try to do this question, activity 3. I will give you 10 minutes. Try to do something for this question. Page number 130 of your textbook. Page number 130 of your textbook. Please complete this question and send me the answers.
So what is meant by dividends?
Dividends.
Yes,
Dividends. Right. Oh my God. Dividend means. I think we discussed, huh? Right. Dividend means profit given by commercial banks. I think last time we discussed. Yes, last time we discussed. I think. Okay. Dividend means profit. Right. Profit. Given by companies. Let's say like this. Let's say Pavitran. Let's say Pavitran purchase. This is my Pavitran purchase. Let's say Pavitran purchase 1,500 shares. 1,500 shares of John Keys PLC. John Keys PLC, one of the large companies in Sri Lanka. Pavitran purchased 1,500 shares. 1,500 shares. Value of a share is 100 rupees. Value of a share is 100 rupees. Here,
Sir, which
that amount in John Keys PLC. John Keys PLC. It means here, purchase 1,500 shares by investing 150,000. 150,000. 1,500 into 100. By investing 150,000, Python purchase 1,500 shares. And then in each year, John Keys PLC pay profit to shareholders. One of the shareholder of that company is Pavitran. Then John Keys company in each year pay profit to shareholders. Then here in this business, one of the owner Pavitran. One of the owner Pavitran. Then based on the number of shares, they pay profit to Pavitran. Let's say like this. Let's say John Keys company pay. Let's say John Keys company pay 5 rupees. 5 rupees for each shareholder. 5 rupees for each shareholder. 5 rupees. Then here dividends received by Python, number of shares multiplied by dividend per share. Per share profit 5 rupees. Per share profit 5 rupees. Then 1,500 multiplied by 5. How much? 7,500. 7,500. Okay. Profit earned by Pavitran 7,500. This is called dividends. Profit received from companies. If you purchase shares of a company, you can get dividends. Is it clear?
Yes, sir.
Yes, sir. Right. Now you can ask questions, no issue. Like Sarah, you can ask questions, no problem, no issue. If you have some of the questions discussed in your school, but still there's a doubt, then please ask those doubts from me, no issue, no problem. Now I quickly complete this question. You need to write down on your textbook, on your writing book, page 130, activity 3. Yeah? Write the answer. Write the answer with the answer. I think I got the answer from Tarun. Am I here? I think there's a printing mistake here in this your textbook. Here there's a printing mistake. This question, third point. Look at the third point. In the third point, it should be it should be Lamai. The direct remittances 8,000 to the bank, and it should be as please and the direct remittance of 8,000 to the bank and dividend of 4,200 and dividend of 4,200.
That means, sir, we have to add 8,000 and 4,200.
Yes, yes. Direct remittance to the bank 8,000 and dividend to the bank 4,000. Printing mistake. Okay, so the printing mistakes. Then you can send me answers to my WhatsApp. Okay, WhatsApp is to this account, to this WhatsApp number. Oh, please, yeah, if not, you can directly send me answers to the Zoom. Okay. If you can't send me answers to the Zoom, send me answers to my WhatsApp, to this number. Naditi, Naditi, bank account format is bank reconciliation format is wrong, Your format is wrong. Make me okay, right? To discuss with me. I got the answer from Hasit, okay, right? Okay, others, send me answers. I got the answers from Hasit, Medmi, Naditi, and Tharun. Right, I got answers from Isra as well. Right, okay, Isra, okay. Right, am I others? Quickly send me answers. All right, okay, here there. So then dividends are debited to the adjusted bank account. Yes, yes, right, correct. Setum. Here, Setum, that direct remittance 8,000 to the bank. Okay, direct remittance 8,000 to the bank. It means direct remittance is received to the bank. Bank statement credit, Setum. Okay, the bank statement debit credit balance, then direct remittance directly deposited cash by a customer. Okay, then direct remittance bank statement credit. Dividends also same. Dividends also directly received to the bank 4,000. Then dividends also you need to debit. Direct remittance debit, dividends also debit. Direct cash received to the bank. Okay, so clear that? Arilakshana. Arilakshana or Arlakshana. Send me answers. Himaya, you also.
Sir, is my balance correct?
Balance, I need to check. Okay, I need to do the question. I think correct, maybe correct, na? 50,600.
Okay, sir.
I think correct. Oshmi, read the answer. Sorry, send me the answers, Oshmi. Isra, send me answers, Isra.
Sir, I sent.
I said, yes, yes, I got the answer. Please. Right, I got the answer from right. Pavitra, na? Right. Okay, Pavitra. Tisasa, send me answer, Tisasa. Right, Nadila, okay, all right. Yeah, Sindhu. Right, yeah, Sindhu answer is okay, yeah, Sindhu. Right. No, Tisasa, no need to write down dates. Now, in the registered bank account, no need to write down dates. Sonal, send me answer, Sonal. Right, I got the answers from right, Panasara. No, Setum, yes, Setum, right. Right, okay, Sanjay, yeah, right, right. Right, now we quickly discuss the question. We don't have much time, right? We discuss the question here. Activity 3. Sevanti Pereira's business has favorable bank account balance of 45,000. Bank account balance is 45,000. Balance brought forward 45,000. Incorrect bank balance. Incorrect bank balance 45,000. And then, however, the bank statement has a different balance. Following reasons are identified for this difference. What are the reasons? Here, the following checks have been deposited but have not been realized as of 31st July. Unrealized check. Unrealized check we need to minus. We have added. Therefore, deduct. Deduct and show the reason for the difference. Then unrealized check minus. Unrealized check. Unrealized check. Check for number 4894. 7,500 and 8,600. Unrealized check. And then next one. The following checks have been issued during the month, but they have not been presented to the bank for the payment. Unrealized check. We have deducted unpresented check. We have deducted. Therefore, we need to add back. We need to add back. The unpresented check plus. Unpresented check. Check number 45 and 49. 11,400 plus 8,600 plus. Right. And then the following items appeared in the bank statement have not been entered in the bank account. First one, the insurance premium paid by the bank on standing order 8,000. Insurance premium. Then we have not adjusted our faults, our issues. I mean, these are not our errors. Time delays in Sri Lanka, nothing to do. Time delays. But unadjusted insurance premium by us need to be adjusted in the adjusted bank account. One of our expense. Then adjusted bank account credit 8,000 insurance. Adjusted bank account credit 8,000 insurance. Bank account credit, insurance expense account, debit. Okay, next right. And then insurance, the direct remittance of 8,000. Here they haven't mentioned about the payer, debtor, or customer. They have just included direct remittances. Okay, if it is direct remittances from debtor, then we can write down here debtor. But here, there is no any indication regarding the payer. How the payer is here, just direct remittance. Therefore, we will record it as direct remittances. Direct remittance 8,000. Direct remittance 8,000. And then insurance, dividend received to the business, or dividend received to the business organization 4,200. Income received to the business. Then adjusted bank account debit 4,200. Dividend income account credit. Dividend income account credit. Okay, next right. Last point. Bank charges deducted by the bank 2,500. Bank charges. One of the mistake done by us. We haven't recorded. No. That is insurance premium. Okay, this is not, that is not bank loan or anything. Here, insurance, payment of insurance. Therefore, we need to record insurance. Okay, the name of the opposite account we need to record. Opposite account is debtor. Then here, opposite account is insurance. Therefore, you need to write down here insurance. Clear? Right. And then my bank charges. Then here bank charges credit 2,500. Bank charges 2,500. Right. And then my done. Finish. Question is finished. Pay the balance of cash book. Sorry, adjusted bank account.
57,200, sir.
7,002.
Right. Then 57,200. And then balance carried down how much?
46,700.
700.
100.
46,700.
700.
Right. Very good. All right. And then transfer this balance to bank statement. 47,000.
Sir, excuse me.
Yes.
The balance should be 46,700.
Yes,
Ah.
sir.
46,700. Right. Balance carried down 46,700. And then students, right. This is the correct cash balance, correct bank balance. Correct bank balance is 46,700. And here, total unpercentage check, how much?
20,000.
20,000. And then here, 46,700 plus 20,000 means 66,700. Okay then?
Yes,
Okay
sir.
then? Right. And then 7,500 plus 8,600, total amount how much?
16,100.
16,100. Now you can write down 11,100, 11,400 again here and 8,600. You need to total unpercentage check and transfer that amount to credit side. In this side. This side. Here also, you need to total unrealized check. And total amount you need to record here. And then balance as for bank statement how much?
50,600.
1,600.
50,600. Right. 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 Activity 4 of your textbook you can do at home. You can do at home. Now we will take a break. We'll take a break. Activity 4 of your activity 4 of the textbook you can do at home. Activity 4. I think sometimes you may have done this question at the school also. At the school also. Therefore, right, I am not going to discuss activity 4. Right. We'll take a break. We'll take a break. After break, we'll take 10 minutes break. Huh? Now time is 9:25. Around 9:25. Again, we start at 9:35. Yes, again we will start at 9:35. Then we will discuss questions available in the our tube. Questions available in our tube. Then next day we can start. Chapter 10. Okay, right. Take a break and then we will start tube. 10 minutes break. Huh? We'll start again at 9:35. Right, we'll start. Huh? Last we discussed up to question number 11. Up to question number 11.
Yes, sir, but we didn't discuss question number 11. We discussed up to that.
All right. Right, Lamai, what's the answer for the question number 11?
Fourth one.
Fourth one. Right. What about others? Okay, answer for the question number 11. Venuja, answer for the question number 11. Huh?
Okay. Yeah, question number 11.
Yes, answer for the question number 11. Venuja.
ഞാൻ ചോദിച്ചത്
Sonal, what's the answer? Sonal.
Fourth one.
Fourth. Right. Harun?
Third one.
Right. Now here, the debit balance of the bank account of the business was 14,800 and the credit balance of the bank statement 14,000. The possible reason for this difference?
First one.
First one. Setu, what's the answer? Setu.
Fourth one.
Fourth one. Tisasna, what's the answer?
Sir, I think the first one.
Minori?
Fourth one.
Fourth one, right. Isra?
Fourth one.
Fourth one, right. Right. Here, balance of the question number 11. Question number 11. Balance of the bank account. Balance of the bank account 40,800 and 40,800. But balance of the bank statement. Bank statement prepared by the bank. But as for the bank statement, balance is how much? 14,000. 40,000. The possible reason for this difference. Check issued but not presented at the bank. Let's say like this, Lamai. Let's say Lamai. Let's say here, let's say Lamai. Let's say bank account opening balance 14,800. Let's say bank statement also for opening balance 14,800. Okay. For example, bank account opening balance 14,800, statement balance opening 40,800. Right. First one, check issued but not presented. Issued check. Let's say our business issued 800 check. Then balance available in our bank account how much? 14,800 minus 800, 14,000. Balance available in our bank. Okay. Bank balance. Balance available in our bank 14,000. According to this question, bank balance 14,800. Bank statement balance 14,000. Then here issued check but unpresented. Then the balance available in bank account how much? 14,000. Statement balance 14,800. But here bank account balance 14,800, statement balance 14,000. Then we can't take first one. Why first one we can't take? Our first take can't take. Here bank balance should be higher than the statement balance. We can't take first one. Issued unpresented check we can't take. Second one, direct remittance 800. Let's say open 40,000, also opening balance 40,800. direct remittance. One of the debtor directly deposited 800 in our bank account. One of the debtor directly deposited 800 in our bank. Then balance is how much? Then balance is 15,600. Right. Now we can't take second one. Why? Because of direct remittance, statement balance is higher than the bank account balance. We can't take second one. Direct remittance we can't take. Third one, dividend received. Same thing. If directly dividend received to the bank, then statement balance is higher than the bank account balance. But as per the question, bank account balance is higher than the bank statement balance. Fourth one, insurance paid by the bank on standing order. Based on standing order, commercial bank paid. Our balance is 40,800. But based on standing order, bank paid. Standing order, bank paid 800 from our bank balance, from our bank account. Then balance is how much? 40,800 minus 800, 14,000. Bank balance is 14,000, but bank account balance is 40,800. Then what's the answer? Fourth one is answer. Fourth one is answer. Bank account balance is 40,800, bank balance is 14,000. Then fourth one is answer. Okay, what are the standing order? Clear? Is it clear? Nadilia, is it clear, Nadilia?
Yes, sir.
Right. Naditi, clear? Right. Yasidu, okay, Yasidu, clear?
Yes, sir.
Yes, sir. Right. Lamai, what's the answer for the question number 12? Which of the following cannot be recorded in the bank of reconciliation statement? What's the answer for the question number 12?
First one.
First one. First one.
First one, right. This is now, in the question number 11, we can't take this one. Then, because of this one, this is now, check issued name, partner percenter. Because of this one, bank balance is, okay, Lamai, question number 11, issued unpercenter check, then this is now, bank balance would be 14,000. Bank balance 14,000, statement balance 14,000. Here, another. Here, as per the question, bank balance is 14,800. Statement balance 14,000. Because of issued but unpercenter check, bank balance is lower than the bank statement balance. Okay, now because of unpercenter check, bank we have issued, we have deducted 800 from our bank balance, and bank statement balance is higher. Statement balance is higher. But according to question, bank balance is higher than the bank statement balance. Okay, this is
Okay.
right. Now I asked for the question number 11. 12. Which of the following cannot be recorded in the reconciliation statement? What's the answer?
First one.
First one. First one. Right. Yes, my first one is answer. Direct deposit. Here there's a printing mistake. Only I check, under check. First one is answer. First one is answer. Right. Telebanking services we will discuss with chapter with chapter 10 we will discuss telebanking services. Chapter 10, in chapter 10 we can discuss telebanking services. Right. Now question number 14. I think we haven't discussed question number 14. Right. Can you complete question number 14? Now quickly complete question 14.
Okay, sir.
Right. Prepare the adjusted bank account and reconciliation statement. Right, we look question 14. Right, now I look at question 14. Right, quickly prepare adjusted bank account and bank reconciliation statement. Please show the formats. Right, now look at the question 14. In question number 14, we'll read the question. Bank account of Silva business for August 2023 was 15,000 of favorable balance, but bank statement balance was different. The reason for the difference are as follows. The reasons for the differences are as follows. The reasons for the difference are as follows. Right. Prepare adjusted bank account and bank reconciliation statement. Right. Then incorrect bank balance how much? 15,000. Lama in this question, Incorrect bank balance. Balance as per the bank account 15,000. Incorrect bank balance 15,000. Incorrect bank balance how much? 15,000. And then the following checks have not been realized. Then unrealized check minus. Unrealized check minus. Then here students write down unrealized check. Unrealized checks. Check number 56 and 89. 5,000 and 6,500. 5,000 and 6,500. Unrealized checks. Unrealized checks. And then unpresented check. Following checks have not been presented for the payment. Right. Unpresented check, add back, plus, add back. Unpresented checks. Unpresented checks, check number 650, check number 985. 7,000 and 4,500. All right. And the next ones, insurance paid by the bank on standing order 3,000. Insurance payment. One of the fault done by us. One of the issue done by us. Insurance payment on standing order, we need to credit into our adjusted bank account. This adjusted bank account, this balance is wrong. We haven't deducted 3,000. Then adjusted bank account credit 3,000. Adjusted bank account credit 3,000. Insurance. Insurance 3,000. Adjusted bank account credit 3,000. Insurance. Right. And then right here we recorded all the transactions. Now place balance of adjusted bank account and transfer adjusted bank account balance to bank reconciliation statement.
Sir, adjusted bank account balance is 12,000.
12,000, right? Very good. All right. 15,000, 15,000 minus 3,000, 12,000. Balance carried down, balance brought forward. And then balance as per adjusted bank account 12,000. Right. Total unpercentage check how much?
11,500.
10,500.
Right. Then 12,000 plus 11,500. 23,500.
Yes, sir.
Yes, right. And then minus unrealized checks. How much? 23,500 minus 7,500. How much balance?
12,000.
12,000.
Ah, yes, 12,000. Python, is it clear, Python?
Yes, sir.
That's right. . Yeah, okay, then Himaya. Arilakshana. Arilakshana or Arlakshana? Is it clear? Arlakshana.
Yes, sir.
Right. Irishma, clear. Right, Lamai, question number 15. Give it answer for the question 15. The source document required to adjust the bank account is
Bank statement.
Bank statement.
the main source document used to adjust the bank account is bank statement. Huh? The main source document is bank statement. Right. Tisha, did you discuss question number 18? Sarah, did you discuss question number 18?
No, sir.
No, right. Fine, then next day we will discuss one or two questions related to bank reconciliation, and then we will start next session, next chapter, chapter 10. Chapter 10, purchase journal, sales journal, general journal. If you haven't take the printout of this sheet, please take the printout. Okay, then it is easy. Okay, I think within 1 day or 2 days we can complete chapter 10. We can complete chapter 10, then we can move into chapter 11. Okay, right. Right. Then Kamai, we'll stop for the day. We'll stop for the day. Again, we will meet on next Tuesday. Okay, right. Right. Good night.
Thank you, sir. Good night.
Thank you, sir. Good night.
Okay, thank you. Good night. Okay.